Hi everybody, Marco Carvalho here from businesscreditblogger.com. Today's video we're going to talk about 5 startup funding options for business. In particularly for those of you, what you'll get out of this video, if you're looking for cash and credit for your startup business completely unsecured, then definitely watch this video. We're going to share with you 5 different sources that you can get cash and credit fast. Okay, so let's get started. First and foremost, as you know, access to funding, it's the lifeline of a business. You have to have access to cash and credit. You may have some money in the bank right now. You may have saved some money, or you have money from friends and family, etc., in your account to start launching your business. But you're always going to have unforeseen expenses. You're going to have growth. You're going to scale your business. You're going to need access to cash and credit. So it's the lifeline of your business. As you know, 94% of startups fail during the first year because of a lack of funding. I always like to use this phrase, and it's by Harvey McKay. It's dig your well before you get thirsty. And that's so important because what you don't want to wait for as a business just starting out is to wait until you need money and you're short on money and you're in a rush for money. It's always best to have access to capital. Okay, so now as far as this particular presentation, we're going to talk about different things that are important for you as a startup business owner. And what I mean by startup, you could be starting your business today, or you could be planning to start a business, or you could be in business less than 2 years. That's what I particularly look at as a business, as a startup, is if you're under 2 years in business. Okay, so you could be 6 months in business now, or a year in business, you're still a startup. So what options do you qualify for? There are 2 main things we're going to talk about in this particular presentation. Obviously, there's so many different types of ways you can get money as a startup. I'm not going to get into the ways that takes a lot of effort, a lot of work, like there's crowdfunding, you have to create campaigns, etc. There's venture capital, that's you have to deal with investors, etc. There's also like SBA loans, which is another long process. This presentation is about fast access to cash and credit. Okay, so that's what I'm talking about. And more importantly, it's unsecured and it's little to no documentation. Okay, so this is the type of sources I'm going to talk about in this video. It's fast money. I'm talking about days and even like 7 to 14 days to get access to capital. All right, so there's 2 main options with these 5 sources that I'm going to talk about to qualify. The first one is there's funding that's strictly credit based. What I mean by that, it's only based on your personal credit, because if you're a startup business, you may have no revenues coming in right now. You may have very little revenues. You don't have any track record. That's why banks tend to stay away from startups. If you're under 2 years in business, you don't have a solid track record. They want to see tax returns and all business plans or P&L statements, financials, etc. Okay, so as a startup business, you don't have that track record. You don't have that profitability maybe yet. So there's funding programs as a startup that's strictly based off of your personal credit, your credit worthiness. Because remember, what you're doing is you're co-signing for your business. You're co-signing for your startup. So we're presenting you to a bank, where a bank's going to issue your new startup a line of credit or a loan based on your personal credit worthiness. So that's how they assess risk. Because if you have great credit, you can get funding for your startup. So the first one is credit-based only funding. That's no doc. That means you don't have to provide any tax returns. You don't have to provide anything. It's just strictly a credit pull. Option number 2 is there's funding programs that we're going to talk about in these 5 sources for startup funding. That's credits and income based. It's based off your credit and personal income. Okay, so if you have a job, you have W-2 income, you have retirement income, or you have some type of income coming in personally, and you want to start a business on the side, or you want to start a business now, and you have good personal credit and you have income, that's just opens you up to more funding opportunities and more funding options for you. So remember, 2 types of funding you can qualify for here. We're going to talk about credit-based only funding, and we're going to talk about funding that's based off your personal credit and your income. Okay, so the 2 types of funding we're going to talk about here is first, in these 5 sources of startup funding for you, first type is revolving credit lines. These are unsecured. This gives you access to cash and credit when you need it. Now, the beauty of revolving credit lines is that it gives you 3 different options on how to repay. So once you use your credit lines, whether it's to buy equipment, buy inventory, or pull cash out, you have 3 options to pay back the money. The first option is you can pay the balance in full whenever you want, no prepayment penalties, and the capital or the credit, becomes available again. And that's paying no interest. So lets you pay it off in 30 days. You have no interest, cash-free money. The second option is if you pay what's called the minimum monthly payment. Okay, and with the majority of credit lines, that minimum monthly payment is 1% to 2%. That's why revolving lines of credit are great types of funding because it's an easier debt to service. Okay, so if you have a $1,000 balance on your revolving credit account, then you only have to pay 1% minimum monthly payment, so very small. Your third option is if you want to pay the minimum monthly payment plus a little bit more so you can pay down the principal. Okay, so that allows you to pay down your outstanding balance a little quicker. So you have 3 different options on how you want to pay back once you draw on your line of credit with revolving credit lines. And in this presentation, we're talking about unsecured revolving credit lines. There are secured revolving credit lines like a home equity line of credit, or you can have where if you go to a bank and they want you to pledge collateral to secure your line of credit. We're talking about unsecured revolving credit lines. The second type of funding we're going to cover in this presentation is installment loans. These are unsecured as well. You don't have to secure them. But installment loans is where you're getting a lump sum of cash injected into your account, your bank account, and you can use the funds for whatever you want, and you get a fixed monthly payment. So once you use the cash up, you don't have access to the cash again. You have to get more funds. But the advantage of this is you have a fixed monthly payment, you have a repayment schedule. Let's say it's a 4-year loan, 5-year loan, 6-year loan, 7-year loan. You know you'll be paid off in a certain time frame. You won't have to worry about compound interest, and it allows you to control and budget for that fixed monthly payment. And there's no prepayment penalty. So that's an installment loan. So those are the 2 types of funding we're going to talk about in this presentation. In the bottom, you'll see businesscreditbuilders.org. That's our main site. You'll hear me always say businesscreditblogger.com. That's where we give a lot of great free information, but our main site is businesscreditbuilders.org, and that's where we share with you all of our funding programs, our business credit building system, etc. Now, ask yourself this question. Do you have strong personal credit? No. Let's say you have bad personal credit, and let's say you have no money coming into your startup. What are your options to get cash credit? You need to get a credit partner then if you want to get access to unsecured cash and credit. Okay, let's say you have a great credit but you can't verify income, then you got to go with a strictly credit only program. So let's go over the 5 startup funding options for business, and these are cash and credit sources. I'm not going to talk about store credit or vendor credit or credit that restricts you to only use it at a particular location. I'm talking about access to cash and credit that you can use anywhere you want. Okay, so first one is startup business credit cards. Now, this is a credit-based only product, and before you go out and apply for a business credit card, I'm going to talk about business credit cards that help you as a business owner build your business credit. A lot of business credit cards in the marketplace are out there, but they don't help you build business credit. They don't separate your personal from your business. Okay, so we'll talk about that in a minute. But the beauty of a startup business credit cards is it's no doc, which basically means is all that's required is you have a good personal credit score and report. This is revolving credit, so you can use it over and over and over again, and you have access to the capital and credit when you need it. It's completely unsecured, and you can use it to make business purchases. You can use it for balance transfers, cash advances. Many business credit cards offer sign-up bonuses, 0% intro APR periods, etc. Now, why should you go after startup business credit cards? Because it's the #1 tool for you as a business owner to separate yourself, separate your personal expenses from your business expenses. But more importantly, if you use the right type of business credit cards for your business, it will separate your personal credit from your business credit. So that's what I call the dividing line, because You can go get a business credit card, no problem, on your own. If you have good credit and you go get, let's say, a standard business credit card from Chase or something like that, that's great. But those particular cards, yeah, you get bonuses, bonus points, etc., but they report to your personal credit. So that's truly not benefiting you as a business owner, because any debt you carry on that card shows up on your personal credit. So your utilization is always going to be impacted by your business on your personal side. Okay, so if let's you have to buy a $5,000 piece of equipment or $5,000 in inventory for your business, that $5,000 on your card will show up on your personal credit report if you use the wrong type of business credit card. That's why I'm a big advocate of only getting business credit reporting cards, because it legitimizes that separation. The best business credit cards for you as a startup or even an existing business owner should only report to the business credit agencies, not to your personal credit, because that helps shield you as a business owner. It helps separate your personal and business expenses, but also your personal and business credit. It establishes the credit file of your business. It protects your personal credit from fluctuations of debt or any missed payments you may have on your business, etc. That doesn't show up on your personal credit. There are over 500 business credit cards in the marketplace, but less than 100 of them report to the business credit reporting agencies. Now, why should you focus on business credit reporting cards? Why is it important for you as a startup business or even an existing business owner? Because when you incorporate your business, if you're a sole proprietorship right now, everything is tied to you as an individual. So you should strongly talk to your CPA and think about incorporating your business as a limited liability company. Corporation is a little bit more pricier option, but for the tax strategy, which is best, you want to incorporate, because what that allows you to do is separate you from your business, because a corporation, limited liability company, etc., is looked at as a separate legal entity in and of itself. It can get into contracts on its own. It separates you and it protects you from liability. Now, what happens is when you structure your business as a separate legal entity, you get an employer identification number assigned. That's also known as your EIN. Your EIN number is used to identify you as a business from many different sources. IRS, that's for tax purposes, banks, lenders, suppliers. It even creates your business credit file. Now, you're also, what I want you to do is think of your EIN as like your social security number for your business, okay? And this EIN number is what you're going to use in the future on credit applications. And this allows vendors, suppliers, and business credit card companies to report your activity to the business credit reporting agencies. So let's talk about the source number one. It's called Startup Business Credit Cards. We actually have a funding program that is specifically designed for startups. So if you have no revenues, you just incorporated today, or you're in the process of incorporating your business, or you're thinking about starting a business and you need access to funding, this is a great program for you because it's strictly based on your personal credit. That's it. Yes, you do need to be incorporated, have an EIN number to participate in this program. But what we do is we get you 4 to 5 cards issued in your startup company's name. These particular cards are designed to help you build business credit. The bank card issuers for these particular cards, you can use them anywhere, they report only to the business credit reporting agencies. So this will create a credit file for your new startup. You'll have 4 to 5 accounts, and the credit lines, combined aggregate credit limits, will total anywhere from $25,000 to $150,000, depending on how strong your personal credit is. And that's the biggest thing, because remember, as a startup, when you're the guarantor, you're using your personal credit, we're leveraging your good personal credit, presenting you to the banks, and the banks are going to issue your new startup unsecured revolving line of credit, business credit cards, based on your personal credit worthiness, and these don't show up on your personal credit though. They do come with 0% inter-APR on purchases, so it's great for you as a startup if you need to make some purchases. You have cash-free money for that 6 to 15 months. And you can always reset that. You can always reset those 0% through balance transfers. Annual APR range will rate anywhere from 9.9 to 19.9% on these cards. Typically for startup business credit cards, we're seeing 9.9 to 15% annual interest rate. Minimum monthly payments on the startup cards will be 1 to 1.5%. You have the ability to pull cash out yourself using the balance transfer strategy. So watch the video at the end here. We give you a recommendation to some of the videos for balance transfer. We'll actually show you right here on the screen. Now, if you want to also pull a large amount of cash from business credit cards, if you're one of our clients, we also offer cash liquidation services. So we're able to pull out all the cash from your business credit cards if you need it. Obviously, there's a little 6% fee for us to do that for you. These only report to business credit agencies, so this creates a credit file, like I said, 4 to 5 accounts. More importantly, this establishes 4 to 5 banking relationships for your startup business. So just imagine you're a brand new company, just starting out. Let's say you have a 720 personal credit score, and we've got you 4 to 5 cards. Let's say you have $50,000 in total credit limits for business credit cards. You now have 4 to 5 banks that your business has now a relationship established with. You now have a business credit report that has 4 to 5 revolving credit lines reporting on it, totaling $50,000 in credit limits. And you just started your business as a startup, and you have access to all that cash and credit when you need it. That will give you a lot of peace of mind, okay? And the reason why you can benefit from this is because you showed good payment history as an individual, so you're leveraging it to your advantage. And this will create a credit rating for your business. So just imagine, though, when you've done that, and now you want to apply for additional credit in the future. Let's say you want to get a retail store credit card for the business. Let's say you want to apply for some vendor credit or supplier-based credit. Imagine the type of credit approvals you'll get then with this jumpstart strategy, okay? You do need to have a separate legal entity, so if you're a startup, make sure you incorporate your business. Your company has to be in good standing. If you're a startup, obviously you should already be in good standing because you just formed your company. But that's basically, you have to go to your state website, make sure you've paid the annual report filing fee. Most states, it ranges anywhere from like $25 to $50, depending on what state you live in, and you incorporate it in. You have to have your EIN number, your business contact information, and a business bank account. These are all standard things that you need to have because we put this on the credit applications for the banks for your business credit cards that we get you set up with. Now, how do you qualify for this particular program? Minimum, you want to have a 680 credit score. That doesn't guarantee you're going to get a pre-approval or get qualified, but you want to have 680 minimum. The higher the scores, the better. You got to be incorporated. You don't want to have any bankruptcy showing up on your report. That automatically is a denial for this particular program. We do accept credit partners. So if you have bad personal credit, but you have, let's say, a family member, a spouse, or a business partner that does have strong credit, then we could get them pre-qualified for funding for your startup. Now, underwriters look at a couple things, and I want to go over this because this is important before we get in. I know there's still 4 other funding options. I just want to make sure you understand a little bit about what goes into the mind of an underwriter and what goes into projections. When we do a review for you, we provide you funding projections in 24 to 48 hours. But credit scores are just a benchmark factor. So I said 680, right? But let's say you have a 750 credit score. That's great. That's one great indicator. But the other thing we look at is payment history. How long of a credit history do you have? Is it a year history or is it 10 years of history? But what about your primary accounts? Some people have really strong credit scores, but the bulk of their credit scores is because they have a lot of authorized user accounts. That doesn't mean anything. That, yeah, you piggybacked and you take advantage of the scoring system because you can take advantage of it that way, but it doesn't show your primary accounts. That's what underwriters look at, your primary accounts that you are the applicant for. So what type of primary accounts do you have? Do you have a credit card in your name? If so, what's the credit limit on that card? How long have you had that card? What bank issued that credit card? That also plays a factor. Did you get a credit card from First Premier or did you get a credit card from American Express? The type of bank card issuer plays a role. The types of credit that you also have. Do you have credit cards? Do you have a loan? Do you have a mortgage? Do you have an auto loan? Now, if you may have a couple credit cards and no mortgage, that's okay. It doesn't mean you have to have a mortgage, but all these things weigh into the types of projections you're going to receive. Active credit cards. What are your limits, the age, the card issuer I talked about, your utilization on your individual cards, and your overall credit utilization. Inquiries, account activity. Did you just open up a couple credit cards? We see this happen all the time where people go out, they open 2 or 3 new credit cards, and then they come to us and say, I want to get some business credit cards for my business, but they just opened and just got about 4 or 5 new inquiries in the past 30, 60 days. We can't help them. Okay, so don't go out there applying for credit if you want to go through a funding program like this. Okay, the age of your business plays a role. If you have really strong personal credit and your startup is, let's say, 2 months old, or your startup is 1 year old, that's a difference. Okay, that will play a role in the amount of credit limits you're going to receive. Now, as far as personal credit scores, I'm going to kind of go through this a little bit quick. You'll see the higher the score, that's just the probability of delinquency, and that's what underwriters look at. It's all about risk for the banks. So scores are a factor. They look at the age of the credit history. And you can always slow down and pause this video to get a little bit of how we break this down and see where do you fit in, so you can have a gauge as to the type of funding projection you're going to receive when you go through our pre-qualification. And remember, don't get too wrapped up on this. When we do a review, it doesn't cost you anything for us to do a pre-qualification review in 20, 40, 48 hours after you submit your credit report to us. So there's no hard inquiry for us to do a pre-qual. We provide you those credit limit projections for you. So before you decide to move forward, you know how much funding we can get for you, okay, in startup business credit cards. Now, you'll see here, this is just kind of your active cards. What's ideal? 10,000 or higher in credit limits if you have it and you're the primary. 5 years history minimum. So we have many people that come to us who have only a year's worth of history, but they have a really good high credit limit, but only a year worth of history. So the history also plays a factor too. Your utilization. Now, what I recommend for you is don't do any pay downs if you're not sure. Let's say you might have one card that's at 70%, another card's at 40%, another card's at 70%. You're not sure, should you pay them all down to under 50%? Let us do the pre-qual for you, because if it will make an impact on your projection, the underwriter will point that out. They'll give you recommendations. They'll even say you have to pay it down to this much in order to get this much. Okay, so that allow us, our underwriters, to give you that evaluation. Okay, age of business, like I said, that also plays a role. Now let's talk about this is an actual client that was a startup. They've been in business less than a year and went through our startup business credit card funding program. In 20 days, we were able to get them $60,500 in credit cards for the business. This was across 4 different cards. Startup company, less than a year old. Now, they had good, solid credit scores. They had some auto loan and credit cards, no mortgage. And you'll see here on their personal credit, they only had 3 inquiries, and 2 were 1 year old and 1 was about 2 years old. And they were past 60 days due on 1, and that's what affected the projection. Okay, let's talk about our second client. $95,500 in business credit card limits, and we were able to achieve this in less than 25 days. This startup is also less than a year in business. That's almost $100,000 in unsecured business credit cards for this business, less than a year old. And this particular individual had 760 credit scores, did have a mortgage, auto, and some credit cards. Highest credit limit had was a $17,000 Chase account. Only 2 inquiries, so very little inquiries. And the age of business less, like I said, I already said that. So that was really a great client that's possible when you have good, strong personal credit. Okay. Now, if you're interested in qualifying for startup business credit cards and get this type of funding, it's a very simple process for us to do a free review for you first before you decide to move forward with business credit card funding. Now, you first go order your tri-merge report, because this will allow you to see and us to do a review on your credit without triggering a hard inquiry. So you go to creditreportengine.com. That'll take you to our Experian page where you can only get, it only costs you $1 to get your report. Okay, download the report in PDF format, and once you download that full credit report, then you're going to go to businesscreditbuilders.org/pre-qualification. That's where you'll fill in your information. upload your report, you'll get an email confirmation, and we'll contact you in 24 to 48 hours with to go over a free consultation and provide you the business credit card funding projections. Now, at the end of the review, when we call you, there's one of three things can happen. Number one, we'll have a funding projection for you. Okay? And that's when we'll answer your questions, go over the program, send you out the agreement to start funding, and it'll take about 14-20 days for you to receive the cards along with all the credit limits that we projected. The second result you may get is a conditional pre-qualification. What that means is that we are projecting a certain amount of business credit card limits, but you have to make certain pay downs. That's maybe because you have too much utilization, etc. The third result you may get is a flat-out decline, a C3 rating for business credit card funding for your startup. Okay, so that may happen, and it may be because your credit file is too thin, or you have, let's say, too many inquiries, or too much new activity on your credit report. Now, the fourth result you may get, and this is kind of like a bonus result, is if you don't qualify for startup business credit cards. When we do a review, we explore all funding options available for you. So while you may not qualify for startup business credit cards, let's say you qualify for a loan, a cash injection. So that's where we give you that option. Or you may qualify for some additional personal funding that you can use for your business. So definitely keep an open mind to that because we wanted to get you funding to help you grow and start your business. Now, the second funding option that you have, your startup funding option for business, is a startup business line of credit. This is a particular program that's great if you're a startup and you've already started generating some sales, you have some revenues coming in. You only need to be 3 months in business for this particular line of credit. What's great about this particular line of credit is it's revolving, it's unsecured, and there's no personal credit check. There's no personal guarantee. It's 100% tied to your startup business. And it does not report to any of the credit agencies, not business or personal. Okay? Now, you could get a line of credit, but the way this works is that the lender underwrites by looking at your business checking account for the business. And now, I'm not talking about, you're not going to get a line of credit if you're only doing a couple $100 a month in sales. But if you're a startup and let's say you're generating $4,000 or $5,000 a month in sales and you're 6 months in business or 7 months in business or even 10 months in business, then definitely this is a line of credit you can get for your startup based strictly on the business bank account deposits, the revenue coming in through your account. Just go to banklinecredit.com. That'll take you to our post where we explain it in more detail and how to apply. It's free, doesn't cost you anything to qualify, and they'll give you an answer literally within 3 minutes. They'll let you know if you're qualified or not. Now, how it works is with this particular line of credit is they allow you to draw on your line of credit online. The cash is deposited in your account in like 24 hours, so it's a cash line of credit. The caveat here, though, is you have only 3 to 6 months to pay back that draw that you took out. So let's say you're approved for a $10,000 line of credit and you pull $5,000 out. You have to pay that $5,000 back within 6 months if you choose the longer term. Okay, so it's not like a traditional credit card where you can stretch it out however as long as you want. This gives you a lock time, so it's a 3 or 6 month repayment term. So here's just a quick example. If you drew $1,000 in cash, your weekly repayment is about $45.41 per week. So your repayment would have totaled $1,089, and there's no prepayment penalties either. Okay, and this is a revolving line of credit. Now, to qualify for this, you have to be a U.S. business. You have to have a checking account at least 3 months, and you have to be growing as a startup. You have to have business coming in, deposits, transactions. So that's what they look for. No personal credit check, no guarantee, no credit reporting. So this is a great, and you don't have to be a startup for this. You can be an existing business. Okay. Now you simply go to banklinecredit.com, connect your bank account. This lender supports over 12,000 banks and credit unions. Now, if you're approved, you can access your line of credit right online and have the cash in your account in 24 hours, next business day. Now, also, if you're a startup and let's say you're invoicing and use invoicing software and you have invoices outstanding, they also give you a line of credit based on outstanding invoices as well. Let's talk about a startup funding option number 3, which is personal loans. Now, you're probably wondering, well, what about business loans? Now, remember, the whole purpose of this video is to go over fast and unsecured and easy ways to get cash and credit for your startup. When it comes to business loans, banks want to see you at least 2 years in business, and most banks say 3 years in business. That's number 1. Number 2, if you want to get SBA loan, obviously you need to have 20% of funding, of the amount of funding that you want. Let's say you want $100,000 for a loan with the SBA backed loan. You have to have $20,000 in an account somewhere in a 401k to show that you have that. That's number 1. That's requirement number 1. Number 2 is a business loan like that could take 2-3 months. Okay, I'm talking about fast funding. So that's why I'm talking about personal loans. Personal loans for startups, you could use a personal loan and inject it into your business, and it's much, much easier because it's only based on your personal credit and your personal income, nothing else. Okay, no business plans, no tax returns, no P&L statements or anything like that. Okay, so that's why this is a great source of income for you to inject cash into your business. You have to be able to verify your personal income though. Okay, so if you're a W-2, you have to show pay stubs. This is an installment type of funding program. So you're gonna have a fixed monthly payment, fixed term, and it's unsecured, and you borrow the money from the bank. It's deposited into your business checking, or excuse me, deposited into your personal checking account, and then you can move over that money into the business checking account if you want. Repayment terms for this is 2 to 7 years. With our personal loan funding program for startups, what we do is we can get you 1 to 3 loans combined. So that's how you're able to raise a lot more capital than just going after one loan. If you want one loan, we can get you one loan. But if you want maximum cash for the business, your startup, this is what we do is we combine a couple of loans. And look, you'll see the combined loan value. We go up to $15,000 to $300,000, and that's based, again, like I said, on your personal credit and your personal income. Okay, so remember, if you're only making a small amount of income per year and you want to get $300,000 in loans, your income has to be able to support that loan. So just remember that. Now, interest rates are in the 8 to 15% range. Repayment terms are 2 to 7 years. There's no collateral. This is completely unsecured. And this scores you need to be at least in the 670 FICO score range. This takes 14 to 20 days to go through the funding process for a personal loan. Same process as startup business credit cards. I'm not going to go into this explanation again. It's just a repeat. Just go to creditreportengine.com, get your report, and upload it on our pre-qual page. Now let's talk about number 4. This is actually unique. This is personal lines of credit. This is not a credit card. This is an actual line of credit at the bank. Now, we get so many startups that want a line of credit at the bank. They've been in business less than 2 years, and they want an actual business line of credit. And I want to give you a little reality check on getting a traditional business line of credit at the bank. Number 1, banks don't like businesses under 2 years old. That's number 1. Not enough history. Number 2, if you want to get a traditional business line of credit, you're going to have to provide 2 years business tax returns, 2 years personal tax returns, your P&L statement, financials, and your tax returns have to show that your business is very profitable. It has to be able to show that it can support the line of credit. The reason why is most startups or people in 2 years in business, what happens? They're at a loss. They have all these deductions. Their business doesn't show a net profit, or it shows a very little net profit. So the bank's eyes, they look at the business can't afford to pay for a line of credit. So that's why you always get turned down for a traditional business line of credit. Going for a personal line of credit, what do the banks look at? They don't look at your business. They look at you. They look at your personal income, and they look at your credit report. That's why it's so much easier to get a personal line of credit. You can use it for business, that's fine. And eventually, as your business grows, you scale your business, then you graduate to a traditional business line of credit once your business is profitable. Okay, I'm just providing you ways for you to get cash and credit for your startup business, okay? Now, this is also a revolving line of credit. It's completely unsecured. This credit line is issued by a bank. So we use credit unions and regional banks and some community banks. But at the end of the day, we're going to set you up with about 3 to 4 of them. You can borrow your money against the line. What's nice about an actual line of credit is you can draw lump sums of cash because you have check writing privileges, or you can make a phone call and they wire transfer the funds. But there's no cash advances you need to worry about with an actual line of credit. Now, $25,000 and $300,000 combined credit limits. This is 3 to 6 lines. Each bank maximum goes up to $50,000, but in reality, $20,000 to $30,000 you can expect per bank. Remember, these banks that we're presenting you to, you have no relationship with them, so they don't know you from Adam. All they're looking at is your income and your personal credit. So they're issuing you a line of credit, but you're establishing now a new relationship with the bank. All right, and this sets you up for potential credit limit increases, additional funding products from that bank. Interest rates are in the 7 to 15% range. This is also flexible minimum monthly payments. You have 2.5 to 5% minimum monthly payment. So it's a little bit higher than the startup business credit cards as far as your minimum monthly payment, but definitely a lot lower than getting a fixed monthly payment if you go with like a loan. Now, no collateral for this line of credit. It's completely unsecured. 680 personal credit scores, minimum requirement. You have to be making at least $36,000 a year in personal income. At least $36,000. It can't be cash income. You have to be able to verify it. All right, so you have to be able to show pay stubs or retirement statement if you're getting retirement income or dividend income or rental income. You can show bank account statements if you're getting rental income from investment properties, but you have to verify it. No excessive inquiries either. Now, same process. This is the same pre-qualification process. How do we know that you're applying for startup business credit cards or lines of credit? Just select which one you're interested in and drop down on the pre-qual page. Or you can also put it in the comments. If you want us to explore all of them, we will. We always do anyway. Now, the fifth and final startup funding option for your business is a corporate charge card. Now, a corporate charge card, this is really unique with this particular card because it's only based on revenue and there's no personal credit check, there's no personal guarantee. And you saw me do a video previously on corporate credit cards, and they're only for companies doing $3 million, $4 million or more a year in revenue. That's how you can get an actual credit card with no personal guarantee, no personal credit check. And I did talk about some exceptions with some business credit cards with no PG. But here, this is for a startup with no business credit history whatsoever. How can you get a corporate charge card with no personal guarantee and no personal credit check? How is that possible? Well, this particular charge card, and what is a charge card? Charge card basically means is you have 30-day float on your money. So if you charge X amount of dollars, you have to pay it in full in 30 days. You probably heard like an American Express charge card, and there's a lot of credit cards where you can carry a balance revolving. A charge card, this particular corporate charge card, you have to pay the balance in full in 30 days. It's completely unsecured, and it reports to Dun & Bradstreet and Experian Commercial. So this is another way for you to build your business credit report. But here's the kicker here. This particular card is strictly based off of you having some revenues in your business checking account as a startup, okay? And I'm going to talk to you about what they look for. There's no security deposit either. This is not a secured card. It's called the BREX card. Now, this is for a startup or existing business that has $50,000 or more of funds in a business checking account. Now, you're probably wondering, well, if I have $50,000 in funds in my business checking account, why do I need a charge card? Or, I don't need the cash. Yes, you do. Because remember, you could have unforeseen expenses. The $50,000 sitting in your checking account is not building your business credit. It's building your bank credit, but it's not building your business credit. But what would how would you get $50,000 in your business checking account? Well, this could be if you, let's say you're starting your business and you have your own personal savings and you injected money into your business checking account, your startup to get things rolling, or let's say you borrow money from friends and family, or let's say you have a venture capitalist or an investor who invested in your business. There's many different ways you could build up that size of capital for your business, but let's just say you have that amount of funds in your business checking account. Well, you could qualify for the BREX corporate charge card. They look at your business checking account history. They look at, even if it's a couple months in business, 6 months in business, 4 months in business, it doesn't matter. They look at that. This is for startups who want to build their business credit. And this is also great if you're a business owner that you don't want to ever worry about finance charges because they charge you nothing. There's no interest at all. How BREX makes their money is they get paid by the merchant. So when you use your charge card at like a store or you buy an equipment with it, that's where they make their money. It's from the merchant, not from you. So it's truly a no-fee corporate charge card. And this is great for business owners where you want no personal liability whatsoever tied to your business. Okay? But I always talked about, you definitely should check out the video where I did corporate credit cards versus personal credit cards. Because that really kind of shines a light on how to go after and get no liability credit for your business. Because it's all about risk. You'll see here with this corporate charge card, they're going to give you an unsecured line of credit for 30 days. It's a charge card. But you have to have $50,000 in the bank. That's their way of kind of minimizing that risk of 30-day float for you, for money. So you can apply for the BREX card at BREX.com. You link your business bank account. There's no credit check on you whatsoever. They look at your cash balance, your spending patterns, and they give you your credit limit. They'll give you a decision within a matter of minutes. So let's recap the startup funding options for business that we covered here in this video. We talked about, and this was fast, unsecured cash and credit for you. We talked about number one, business credit card funding. That funding process through our program takes 14 to 20 days. You can get anywhere from $15,000 to $150,000 in revolving business credit cards for your startup. Number two, we talk about a business line of credit. That's if you have some revenue coming to your business, you can get access to that funding in less than a day. There's no personal credit check on that one, no personal guarantee. We talk about personal loans for startups. This is great if you have verifiable income, you have good personal credit, and you're looking for a cash injection. Funding process, 14 to 20 days. Another one we talk about is personal lines of credit. This is also, you got to have verifiable income, good personal credit, 14 to 20 days for this one. And we talk about the corporate charge card. That's if you have nice cash in the bank as a startup and you want to build your business credit and you want to get access to like a charge card for that's tied to the business itself. This is another option. So these are 5 startup funding options for you to get cash and credit. So if you like this video, give us a thumbs up. Click the subscribe button because we're always putting out videos like this, different creative ways for you as a startup, existing business, or even a real estate investor, how to get access to cash and credit, how to build your business credit and protect your personal credit at the same time. Be sure to check us out at businesscreditbuilders.org for all of our funding programs. If you want some more education, check out businesscreditblogger.com. With that, make it a great day. We'll talk to you real soon.